Christian, thanks for joining us. Let's first of all talk to you about what you're describing as a quick and dirty fix.
Well, obviously, I mean, the ECB/EU massive liquidity pumping into the markets last Monday around these hours also obviously was a dirty and quick fix. But the real issue is how the EU finance ministers is going to deal with these very, very high debt levels. That is the real problem of the Eurozone.
Is it just something which is going beyond any, beyond indebtedness? Is it that the motor of growth has to be changed for the Eurozone?
According to our view, it is. I mean, we are going to see subdued growth for at least 5 years within the Eurozone, simply because the growth engines, France and Germany, is also having high debt levels. But the real problem is whether these high debt levels from Germany and France is able to sort of guarantee the bailout package, the trustworthiness of the bailout package on a longer term. And we are quite skeptical as regards this.
All right, we've seen, of course, on the foreign exchanges how the euro has weakened. That could help to alleviate some of these problems, couldn't it?
Sure. I mean, short term, I think we're seeing irrational exuberance in markets, especially in currency markets right now. I mean, your dollar is trading around 122. It could even go down and touch 120. However, year in, we still stick to our target around 120. We think the euro will come back once some plan is set forth by the EU finance ministers as how to deal with this, because we are not going to avoid any austerity measures on the bigger scale. Otherwise, the trustworthiness in the euro in the medium term will suffer quite significantly.
Where does this all leave the European Central Bank and also Jean-Claude Trichet in terms of their reputations?
Well, we think his reputation is sort of down the drain, really, because, I mean, Friday, prior to the massive liquidity injection and reopening of programs, he said that they were not even thinking, that Thursday, they were not even thinking of intervening in bond markets. And Monday morning, they started intervening in bond markets. I mean, the ECB has moved away from an independent classical thinking in central bank terms, like the German Bundesbank used to be, into a political instrument. And that is a very, very dangerous road to travel by.
Let's just talk to you about what your chief job is as an equity strategist. Where does it leave your strategy here?
Well, I think sort of short term we're going to still see retracement in equities. But it is not justified by fundamentals, because we had very, very strong earnings out from companies in the United States. 56% growth on average in S&P 500 year over year, and 16% surprises on the average earnings report. So they are very strong earnings. However, I think we're going to see a fact that those companies very exposed towards internal European demand is going to have a very hard time making earnings the next couple of years, while those within Europe and the US especially are exposed to global demand will do just fine. We still believe that emerging markets has a lot of growth potential, and we are solidly exposed here, even though it hurts a bit.
Which companies in particular here, Christian, very quickly?
Very quickly, we are favors of tech companies like Intel and Cisco. We are to some extent looking towards mining companies. We still like BHP Billiton, and then consumer staples like Danone, Kraft, Kellogg. Those kind of companies with a solid dividend payout is something we prefer currently.
Christian, thanks a lot for that. Christian Blaabjerg there joining us from Saxo Bank.